So Yahoo is a name and it's a brand that certainly people know very well. I think given the long history of the company, people might be less familiar with what the current business is. And it's got so many different properties in it between fantasy and mail and news. So just give us the primer here on when you think of Yahoo, the business today, what are the different segments of the business and how do you structure it?
Yeah, it's funny. Having been a part of this turnaround now for a few years, I actually think people are very familiar with it. It's just that they're familiar with the brand that they use. So, Yahoo Finance, Yahoo Sports, Yahoo News, Yahoo Mail. These are all number one or number two in their categories. And any given month, we are 250 million users a month in the U.S., 700 million globally. So for our users, and there are a lot of them, they're very familiar with those brands. Obviously, in Silicon Valley, the larger Yahoo story, which is now 30 years old, has a lot of baggage with it that needs explaining. I think that kind of adheres to maybe the global brand of it. But no, Yahoo is, especially now a few years into our turnaround, it's a very healthy, thriving business. And we've now kind of evolved to the point where we're starting to take shots on goal on the product side.
So walk us through the business today, the structure of it. I mean, how do you think about it? Do you think about content as one bucket? Do you think about the mail and the advertising business as another bucket? What are the different sort of pillars?
Um, Look, I'd say the CEO of Yahoo used to be put on stage kind of for sport and asked to define whether it's a media company or a tech company. The answer is it's a product company, right? When you're using fantasy football, that's a product. Stock charts, that's a product. Yahoo Mail, Yahoo Search, where we're still the third largest search engine in the US. So like any major consumer internet company, we come at it from a consumer first basis. These things collectively then add up into one of the best treasure troves of data on the planet. We use that not only to provide better user experiences, but also to provide insanely, well targeted advertising that converts at an A+ level compared to most, major internet companies out there. And that's still the spine of the book for us from a monetization point of view. So it is all of those things, collectively. Together, but each one of them operates independently internally. And from that standpoint, we have a general manager on charge of each business. So someone who's an expert at mail, an expert at sports, at finance, et cetera. And we let them run and compete in their categories. And, by that token, I would say we're very similar to other conglomerate internet companies, right? Neil is the CEO of YouTube. You have Adam running Instagram, and we have our own, smaller, in some cases, version of that. But so Yahoo really collectively comes together with the top level brand, but we are, as a company, we are strongest as a bunch of independent products, competing in their categories.
Walk me through the turnaround plan that you have executed on over the past 5 years. What were the initial problems that you identified? And then one by one, walk us through the past 5 years and what the major milestones you've hit are. And then the second half of this is I want to talk to you about the AI era and what
Yep.
you guys are launching there. But just walk us through the last 5 years
Yeah.
and what your playbook was.
I mean, really, it's a little over 4 years. We got a hold of this asset at the end of 2021. Very interesting time to take over a company. It was the middle of COVID. People were not able to see each other. We kind of had to get through some of that. The first couple of years of a turnaround are foundational, where you're identifying, the opportunities, both to improve things, but also like what you might be able to do with these assets on the upside. So we did that transformation work, and that involved everything from reorganizing the entire company, bringing in outstanding talent, from my past days, as well as their networks, and we really have incredibly talented people running these properties now. And then we also had to do things like completely redo the business model. The underlying revenue engine of this company was very different and really had to be replaced. So in early 2023, we swapped out a lot of the past 10 to 15 years of ad tech that was supporting the revenue and replaced it with a whole new revenue engine. So you really had to go through all of those steps, which then left you in 2024 with the ability to start to rebuild all of our consumer facing products, and every pixel on Yahoo was rebuilt between 2024 and early 25, leading to some of the things we'll talk about in a minute on the AI side that we've done. But really, those are all the steps. So I would say for a turnaround, is that Yahoo had great bones. And even after all this time, it had a huge amount of traffic, which is the hardest thing to get. It had a very well-known brand, which even though it had been through the ringer, is also very hard to build. And on top of those two things, you can, really do things. You can optimize the team. You can, figure out the right ways to make money, and you can start to build better products. And it's funny with some of the things that we've done. People have said, "I wouldn't have expected that from Yahoo." And my first instinct is, well, this is definitely not the same Yahoo. This is an entirely new team of people who are not here for the periods of time that they're talking about. We're just people who came in, saw an opportunity with these assets to do something special. And yeah, if we're successful at that, then I think the turnaround's a great story. But I promise you that every day that we go to work, we're focused on how do we create great user experiences and deliver for our advertising partners.
So now you've firmly entered the AI era, and you've come to market with Scout, the Yahoo powered AI chatbot, and you've said that it leans on a lot of the data that you have in the background through all your Yahoo properties. What to you is the differentiating factor here with Scout as you compare it to all the other
Yeah.
chatbots that are built from search engines?
Well, first I'd say there aren't very many. So I'd say just by entering the
The
category,
big ones, the big ones,
yeah, yeah,
the
I
big
actually
ones.
I agree. I don't
How
think
do
that
you compete?
it's interesting that as you really look around the category, you have the major LLMs, which would include Google, and then it's really Perplexity and us is the only like really scaled search engines of this nature. As we looked at that category, coming out of our transformation period and into the ability to take shots on goal, and still being the third largest search engine in the U.S., we had to make a choice. Yahoo has been outsourcing search to Bing since 2009. So it's a very long time since Yahoo really tackled search. But as we looked at the AI category, it really turned out to be an opportunity to get back into it ourselves, and that the best people to build the next generation search engine for Yahoo was Yahoo. And the reason is because we are the ones who have the first party relationship with all of these users. 75% of people who come to Yahoo come directly, meaning we're not acquiring users and bringing them down a funnel. They're coming directly to Yahoo. Over 70% of people who come every day are logged in, and so that really turns out then, if you put it on top of all the vertical data that we have and 30 years of experience and queries going back in search, we have this incredible, set of data that if you layer AI search on top of that, you can produce extremely high quality answers that are very unique in the category. And we also thought that we had something to say that was unique on the user interface side, which if you use Yahoo Scout, if you go to scout.com, you'll see it's different than anything else that you've tried out there. It's not done in chatbot fashion. It's much more congruent to search, which is where we're starting out. And so it gives you answers in that format, but in a much, more rich and robust visual way that I'd say has a little more personality. And then very importantly, takes its own point of view and has a core value around sending traffic back to the open web where these answers come from. The first generation of AI search kind of took all of that content off of the open web and then did like little citations, pointing back to that content, but not really sending any traffic downstream. And if you use Yahoo Scout, what you'll immediately see in the product, highlighted in blue, are links back out to the content that creates these answers. And we think it's an extremely important thing not to do just for our users and for the experience so they can check sources more easily, but also to keep the open web, surviving and thriving in the future. So we can keep getting these great answers, from all those products.
So if you are on the side of the blue link economy is still very much alive and well, and you have built a chatbot around that perspective, how do you think then about your own advertising business? And are you planning to introduce ads into Scout if not already? I'm not sure. I would love to also ask you about your opinion on
Yeah.
having partnered with Anthropic. We obviously saw Anthropic's Super Bowl ad that came out
Yeah.
against some other ad-supported chatbots that are out there. What is your perspective on introducing ads in Scout in chatbots, is that going to be a significant part of your business?
Yeah, look, I mean, I think if you are subscription only, your business model is more like Netflix than it is, the search model that's gotten, Google to the top, and is such a high percentage of global advertising. Search advertising as a concept was litigated back in the late '90s. That question has been asked and answered, and with the emergence of Overture into Google AdWords and AdSense, this is something that is very congruent with the user experience that users expect and keeps the product free. Yahoo Scout is free. And so while I would imagine we would have, tiers of subscriptions down the road for deeper versions of the product, I think something that subsidizes the product for end users that is still extremely congruent with getting great answers is not only doable, but essential. And I think that there's a way to bring search advertising through to AI search, and I think it looks a lot like what we built. And the ability to introduce paid links in a way that is different and that users understand what is paid and what's not, but still enables a search marketplace to exist that has auction dynamics, competition that increases relevance, expands coverage, and drives yield for the property is something that really can be done, but also is essential to keeping these products free when they're very expensive to build. If you look around any other category, right? When our old team built CBS All Access, which became Paramount Plus, we launched right away with ads. And then when we introduced an ad-free tier, it was merely the amount that we made with ads, stacked on top of it. And it was always clear that Netflix would head down that pathway of having a product subsidized with ads because a huge number of people actually want a lower priced product. Some will pay for ad free, some won't. And so I actually do think it's a very uh, it's a sure thing that's going to happen in this category that it can really be done. And while the ads were funny and interesting, although they did paint chatbots in kind of a creepy way that I think Yahoo Scout does not do, and I think people who think that about chatbots should give our product a try. Um, it probably is not realistic that that's where things are headed. That it's going to be purely ad free.
But is there a risk at all that the traffic to Scout and the business that advertisers spend on finding ways to get brand awareness through Scout, would that cannibalize your search business at all? Is that a risk?
Well, I think it's a little like Indiana Jones, replacing the sandbag and the goal. Over time, I think these things um evolve to the place that they're headed. They're clearly coming together, right? As you've seen the growth of Gemini in the rankings, most of that is with the introduction of the AI mode button versus people just downloading Gemini more. It's because these products are coming together, which really, a year ago is what drove us to start realizing that we had to do something in this category. We're not just going to sit there and have traditional search. We need to evolve the product for users. So it will continue to evolve. I don't see any way that really has much to do with whether ads are introduced or not, as long as they're very clearly ads and they are separate from the non-paid content. So no, I actually think the blend is where the product is headed, and what a search engine will have to do. And this is a 20-year-old evolution, right? Google has not been 10 blue links since 2004. It has had structured data in the product for a very long time, increasing over time, even before AI. So that evolution will continue. AI is another part of that. And I think Yahoo Scout is a everybody should check it out. It's extremely interesting. We got a lot of great feedback on the UI, especially, but the quality of the results stands up there with anybody's. And I think is a really good example of where the category could be headed.
How many active users are using Yahoo Scout now?
Well, we're still. You got to give us. We're still just a couple weeks in, so we're not announcing that yet. We also.
I'm giving you a shot here.
Yeah. I know.
Look,
I know you want to make news here. So it's.
no, I just mean, we're talking
Yeah,
about
yeah,
shots on goal.
yeah.
Gemini's coming out with their users.
We we just launched in beta, so think about this as when they launched in early 23 or something. We just launched in beta, and what we really wanted to do is get in the hands of people first. And what I would say that is very interesting as someone who's started companies, launched new products and new categories before, the most important thing, gratifying thing so far is that user numbers are growing every day, and that the gap is widening between the number of users per day and the number of searches they're doing per day is increasing every single day. So the people using Scout are using it more and more, and that is the sweet spot for what you want to see.
So where does all this leave Yahoo now in terms of its forward-looking timeline on an exit from Apollo? Is there
Yeah.
going to be an IPO? What is the timeline for it? Or if not an IPO, I mean, how are you thinking about it?
No, I mean, I think we're the same as any pre-IPO company now. We're owned by Apollo, and certainly PE has a certain focus on outcomes that is is just the reality of it. But like any pre-IPO company, whether it was venture funded or owned by PE, the outcomes are you IPO or you sell, or I guess in some cases there are big internet companies that have stayed private forever, but I don't think that's our situation. But in terms of how I, as the captain of the ship and giving orders to the team, is to focus on product. It's focus on growth and let the outcomes take care of themselves.
Which do you think is more likely, an IPO or a sale?
Unclear. I do think, given the relative values of things, anybody to let Yahoo keep increasing in value is it's just making it more expensive. We really feel like we have a tiger by the tail here with this asset. We're going to keep increasing the value of it every day that goes along, and I think what we're doing with massive distribution, with hundreds of millions of users, with an ad model that completely works and converts at levels that are rare air in this industry, and with something that we're seeing across the category, which is data. Both of our usage and our users over time with these products is a solid gold asset that just is extremely rare as well. These are all things that are going to be more and more valuable over time, so we're just going to keep building.
And let me ask you one more question before you go. As you think about the conglomerate that you're running here and all the different assets, I mean, would you ever consider breaking Yahoo up or splitting off different entities to sort of isolate parts of the business and go about it that way?
It's funny, that was part of the thesis originally, that perhaps that would be the case. What you've seen over time, and what I've learned more and more over time, is how much these things are really related to each other. And there's a real Yahoo ecosystem. The average user uses two or more of our products per day. And we have huge cross pollination, across them. So while somebody might be, and you'll hear this, let's say I don't use Yahoo anymore, but Yahoo Finance is my homepage, or they're in five fantasy leagues, or they use Yahoo Mail. Um, the average, user is going between these products, and I think with Yahoo Scout as a platform now that can really weave them all together, and the next step for Scout really is personalization, anticipating your needs and delivering it to you, what you might need to know or do before you've thought of it. The advantage of having all of them together, and maybe we'll build more verticals on top of this, or buy more verticals on top of this to expand what Yahoo means, rather than think about them independently and breaking them up. I definitely think we go further together than alone.
And last question for you, and then I'll let you go. The Polymarket partnership was really interesting to me that you guys did. Talk to me about where you think prediction markets are going from a regulatory perspective. You've sort of said that you want to play in the space, at least from, from adjacent ways, with the data and
Yeah.
stuff like that. But I mean, how do you think about that in the current regulatory landscape?
Well, obviously, we'll swim with the current on the on where it heads from a regulatory standpoint. For us, it was very interesting is that we inherited in the sports betting category a really old deal with BetMGM that Verizon had done years ago, that is now up at the end of this quarter, finally, after all this time. And in between all that, we actually partnered with Polymarket, not only in sports, but in finance, and really across the Yahoo portfolio, gave us an opportunity to do that in states where we didn't work with them, with BetMGM. And so, similar to partnerships that we've looked at in things like crypto for Yahoo Finance, We view this as an opportunity for something that to partner in a place where users need that product, but we don't, we're not the experts ourselves. So, again, I think, some news came out today about prediction markets from on the federal side, and kind of protecting that. But again, if that is some open territory to operate, we're going to partner and we're going to get in there for our users.
So you think they're here to stay?
It's unclear yet, but to the extent that they do, I think distribution through Yahoo is something that I think all of them would love to be a part of, and it's been great to kind of play the field here the last few months to try to pick the best combination, of factors for the best partnership. So we'll have more announcements on that to come.
Great. Well, Jim, I want to thank you for coming on. That is Jim Lanzone, the CEO of Yahoo, here on TITB.